And here's the one that scares me the most, though. The food stocks are starting to move. I know you do a lot of work on the food stuff. I own BGS, ADM, look at Kroger. I mean, all these food company prices, Hormel, they're all starting to move. So the only way in which you're going to be able to outrun inflation is you got to own assets that are going to exceed the price increases that you're gonna see in the grocery stores and at the fuel pump. The manufacturers now are going to be like, okay, I can't pass on the price increase that I want to get to make sure that I get my margin, because you don't get the volume, and that's when things start to collapse.
Good afternoon, everyone. Today I have with me Bob Kudla. We're going to talk about the future a little bit, what's going on with the world events and how that is now starting to trigger people running for flights to safety. Their money, the world is upsetting as we speak. Literally on this interview right now, we are watching a change of an age happen. We can go to tradewith2030.com or tradelikeagenius.com. And every single month that Bob and I talk, we try to get that general trend direction moving, especially with the Bitcoin halving coming up. I've been doing several videos on agricultural commodities just running to the moon. I mean, when I say hyperinflation, I'm not kidding you. Prices are doubling like every 3 days for cocoa now, and it's up around $9,000 a ton. I mean, just absurd things are happening. Cattle prices, and then Bob talking about gold earlier. We're going to cover quite a bit, and hopefully it'll help you see that the shift of the change of the age is here. And today's episode, Revenge of the Hard Money, I think you termed it there, Bob. So thanks for joining. Floor's yours.
Yeah, I mean, thanks for having me. So, we've been watching basically since the middle of 2023. We started to see the rotation happening. Bitcoin's up 300% since 2022, and they kind of always lead the flock, if you will, because they're the least able to be manipulated asset out there. I know the money changers have been trying really hard to figure a way in which they could create synthetic Bitcoin out there, but they tend to keep getting burned by it. That Bitcoin move still has, probably another double in it before we see anything significant in a pullback. So it's going to drift and lift the Bitcoin miners up, even though the halving is coming. It's still going to probably give them a good move. And look at the Bitcoin miners today; they're popping. And then you go shift over what's next. Well, the most liquid market out there, what I would call a hard currency, the most liquid hard currency out there is oil. Oil is supposed to have been selling off, quite a bit now, and it just keeps driving up. So we probably have another $10 move in oil before we get to its seasonal weak period in the middle of summer. And so that's another, you're looking at probably another 14 to 16% move in energy prices, which is going to keep the inflation rates inflated. And then we've had our laggards, gold and silver started to move, and silver exceeding gold move, which is normal. You and I know that. Just for people listening now, Dave and I were I was the first interview for Dave, and Dave was the first interview for me when he started Adapt and I started Tradegenius. We would do things at midnight Taiwan time, and we do a 7-part thing talking about climate, food, silver, gold. Well, it started, the fruition of it is now starting to accelerate. And the last laggard out there has been copper, and then copper starting to move now too. And people say, well, why is all this happening? Well, in China now is the marginal determiner of price for gold now. The New York gold market is rapidly losing its ability to set price. Copper's always been a Chinese thing because of the collateral in China. You did have these massive warehouses in China where tags are moved around. When people borrow money and they use copper as collateral. And so now copper's starting to move too. And so now we have the whole entire commodity space in motion. And this is secular. And this happened, Dave, in 1970, when Nixon closed the gold window. And then we had basically a decade of inflation. And I think that's what's going to happen here again. We're going to get a decade of inflation. The Biden administration just doesn't care. Janet Yellen has been very clear about, her easy money policy, and what they're going to do is they're going to do financial repression, for people in terms of their personal income, but they're going to let these asset prices rise and basically create inflation for them to try to inflate away the debt. So we don't have to be a victim here. This finally, and we're all still gun shy. We got it. Oh, they're going to shoot it down. They can't do it now. Just like Bitcoin, they were able to pound it down, pound it down, pound it down, and Bitcoin's moving back again. And same thing with gold and silver. Gold's going to go to 2,500 this next move. I haven't done my write up on silver yet, but it doesn't matter. If gold jumps another 10%, silver's up another 15 to 20%. So it's all things commodities right now. And here's the one that scares me the most, though. The food stocks are starting to move. I know you do a lot of work on the food stuff. I own BGS, ADM, look at Kroger. I mean, all these food company prices, Hormel, they're all starting to move. So the only way in which you're going to be able to outrun inflation is you got to own assets that are going to exceed the price increases that you're gonna see in the grocery stores and at the fuel pump. And then other than that, it's just strap in, baby, because it's going to be a wild ride.
Wanted some grass-fed beef. There's some guys that I was talking to, old timer, traded cattle for 70 years. Like, I've never seen anything like this. It's going to run, and their charts, they're looking at breakout pennants, and they're looking at just absurd prices for beef. And again, how are you going to outrun that inflation? Well, you could trade, or every couple of days, every week, take some gains off of that. That's what Bob's service is all about. And trade with 2030.com, tradelikeagenius.com. But think about if it does run away, because, I was talking to my parents a couple of times, not just in the last couple of days, but over, say the last 2-3 months, asking them the same thing. Like, I was a kid during that time, and they said it was kind of rough that inflation rates got so high, up around 18%. Now, can you imagine that? We're barely holding everything together with baling wire and duct tape right now and bubble gum to keep things together. Now, what happens when inflation rates run up to 18%? That is going to be a catastrophic event for everybody, because you got to think about how much is turned over on credit for just movement of food from the producer into the supermarkets. Like, what's that carryover, Bob? I mean, what do you think the percentage of moving good A out of the field, processing in a factory, and finally getting it to your store shelf? Like, how much do you think of overall of that is going to be interest payments by holding notes and these sort of things? What do we think is built into that? Now, that's going to run up 18%, then your food costs are going to run up even higher. So seems like we're getting pinched on every single angle here. And I'd like to hear more about what you think the assets, obviously gold, silver, but then, what else is there? But you have to also create some income at the same time, and static wages aren't going to do it.
Well, I'll just tell you how I'm personally positioned. And so on the food side of it, ADM is my cornerstone, because they sit in the middle of the value chain. They buy from the farmer, and then they went ahead and they do value add, and they create products for either the wholesale markets, the food companies, or directly to the retailer. And so as food prices rise, when you hold inventory, you're holding an appreciating asset. And so and the same goes with Kroger, okay, the food company. So when Kroger buys food, and if it takes a month for it to move through their retail operation, well, they get an automatic good guy in the cost of inflation. So those are the stocks you want to own. BGS is another one. Hormel is another one that are publicly traded companies. In addition to owning them, I sell calls against my positions, which creates an additional lift to my yield. And my philosophy on owning things, not necessarily just trading, is that you got to create every asset you own as a kind of a rental property. What is the yield that you're going to generate, from that asset? So, the way I think about wealth, if you could be worth $10 million, but if you can't generate yield from it, you're not necessarily wealthy. Okay. You're just sitting on a number on a screen. To me, wealth is the ability to turn that asset into income generation. And so that's why I sell calls against my positions. I like dividend paying stocks. and I'll outperform you. So that's how I look at it. I was just looking at my daughter's account. I started with her in 2022. She's up 30%. Well, she's outpacing inflation, and all I have her in is really run of the mill, energy name, food name, a shipper that all do yields, and then I can sell calls against those positions. So that's just a nice grind out, and that'll work in a down market too. So and no tech in there, no SMCI, none of that crazy crap. This stuff is going to be grind out for years for her. And we have stocks that we give people like that. You can have ExxonMobil, you can XOMO. It pays a 15% yield because they do the call selling for you. You can have TLT, which is a bond fund, and do TLTW, and they pay a yield on top of it. So there's a lot of ways in which we can trade this market to outgun inflation. And my personal view, Dave, is that we're probably running close to 9% on the inflation rate. The inflation and cost of living are two different things because unless you're compelled to buy something, it's really irrelevant to your life. So you have to look at what percentage of your budget is have to have and what percentage is want to have. And then also in that have to have, can you substitute down? So that's what's going to happen to most people. Most people are going to have to substitute down their lifestyle, and then they're going to have to forego the nice to have. So when you're thinking about trading, and you got to be totally emotionless about all this stuff. You can't stop any of this, okay? So you're just going to have to beat it. So I say to myself, okay, what do I need to own that everybody else has to have? And that's what I put on my watch list, and that's what we set our algorithms on. And I know we gave you access to the algorithms. I'd like to hear your perspective on how much you like them and how well you're using it.
Yeah, I look at a couple different time frames on it. So I go out to the 4 hour and then I see what's leading on the 5 minute, come back in 15, 30. And then I like the way that it rolls over when the signals that you build into the algorithm there, that it turns from that green into the pink. And then on top of myself, I put some moving average indicators in there. So when I get that crossover or things are expanding out on the different levels or days that I put in there for the moving averages, that I can see it widening out, that I know that it's market expanding or if it's coming back together. And then I can kind of, yours is first, and then I use the others to double check and back check when I start to get those signals. Because, again, that emotionless thing, easier to say than to do, because you get a little, you're gonna lose it, So I'm also, coming over and getting more comfortable with when things drop, just to like, all right, hold on, it's going to come back. Still shows the indicators, pushing hot with the money flows. So just hold on. Even though it dips out for a second, it looks like it's going to come back. And it's surprising how well that algorithm does whatever your magic is behind the dashboard there does predict.
Yeah, and we have two algorithms too. The one algorithm that Dave's talking about is the one that is basically showing you when you should enter the trade. We have a second algorithm that's also on there called the Ranger, which should tell you if the Ranger, it's a bar that's either under price or over the price. And if it's under the price and you get what we call the worm, when you said turning to green, that's when you can take a high probability trade. If the bar is over price, then you need to look for confirmation like you like to do with the moving averages. We like to use the vol stop as a second test when the range it's in sell to rip mode. You want to have double confirmation before you want to take a counter trend trade. But yeah, it works. We teach people how to use it. So simple. It's very visual. So, you don't have to sit there and say, oh, should I take this trade? And we like to joke around. I built this thing so I can take emotion out for me. So we call it see trade, take trade. See trade, take trade, set stop, move on. And then you adjust it every, if you're trading on the hourly, you adjust your stops every hour. If you're trading on the 4 hour, vice versa. You're trading on the daily, same deal. Depending on your time frame, you can trade any asset, any time frame, because it all works off momentum. It works off Fibonacci retracements, and it works off a rate of change. And so those things are just universal. It's math. And so, and it works great. The track record is, is 66% win rate. The profit factor is positive, which means you can have a 100% win rate and make hardly any money. So you want to have a reasonable win rate, and then you want to have what's called a positive profit factor, and then you're going to make money over time. And that's what our system does. We have a track record out there showing the last 4 years of trades. You can go ahead and take it. And Dave, I sent you a bunch of stuff from some of our customers. We had a couple of customers over the last 4 years, went from being trading newbies to being able to do this full time. So, and they put their stories out there for me to share with you guys. So it's a good system. And just to be clear, I don't like to oversell this system. It's a good system. And so, I don't, people get in there to get all ebullient and, and you burn yourself out. Is that this is a good way to start to give yourself a second income source. Secondarily, you can generate additional wealth. And third, if you really, really give it the time and energy, it is something you can do full time.
And I encourage everybody to check it out because, with the food thing on the end of it, today, Russia is now using the Zircon hypersonic missiles that travel at 7,200 miles per hour, and they are going to level Ukraine. So if you think they're going to plant this year, and if you think there's going to be any yields coming out of there, you're sorely mistaken. If it is, it would be just mere fractions of what it was prior. Even before all this has taken place today, they were talking possible 10%. They were looking at the high, 9 to 10% range of total production over the last, say, 5-year average. And if what's going on today, then some of these bread baskets are going to be greatly affected. So you can just see how you're going to have different motives and methods to keep generating income and, think outside the box for a minute on things are going to start to get quite a bit more expensive now. We've really entered a new era here in terms of what's going to stop and how expensive things are get. I think it's going to blindside a lot of people. That's my own feeling. But then at the same time, try to dovetail these two together. The Bitcoin mining block is going to go from 6.25 Bitcoin down to 3.125 right here in about, 25, 26 days. And it seems that there is a run on Bitcoin where the institutional buyers are swooping up everything. And then with only half as much coming to the market. I read in Zero Hedge that are looking at about maybe 6 months, then we're going to hit that wall where there will be no available Bitcoin. So, if you're going to start to think about taking advantage of something right now, this is the golden opportunity, a really once in a lifetime opportunity in front of us right here. And I don't know what you see on the horizon there, Bob, but I see something that I don't think happens every generation right now.
This is like, 1932, 1970 kind of a reset. I think every 40 or 50 years we get some sort of reset. 1870s we went from gold to silver. 1932 we went from gold a gold reset. 1970 we went from gold to fiat, and now we're going to go to fiat to digital. So it's going to be really, really interesting to see. The one thing about Russia though that I know Russia's pumping these missiles into Ukraine. First of all, those missiles are very expensive. Number two, their yields are low. So it's really a terror weapon more than anything else. But what Ukraine is doing to Russia is very, very different. Ukraine is pumping drones into their refineries. And so people don't realize, the Russian oil fields are, either back in Siberia or they're right down there in southern part of Russia. They're very vulnerable, unless that oil goes to China. Russia may not be able to get their oil out of their country, which is can cause quite a spike in oil going forward. And with the Houthis trying to do things at the in the Red Sea, we have a recipe for potential out of the blue spike in energy costs too. So people always ask me the analogy here. I encourage people to read Revelation 6 in the Bible. Basically. People who have to, basically live to work or work to live. I think work to live is the right analogy. They're going to be hurting, and the wealthy are going to be just fine. And I think that's what's happening here. I think we're in that phase of human existence where the wealthy and the elites will use the rising asset prices to pay for their increased cost of living. And people have to work for a living, or people who are retired on fixed income, they're going to get ground to death. I'd rather not be a victim, and I'd rather kind of outrun this and then just be smart about, where this is all going, because eventually inflation leads to massive deflation, because what happens is no matter how high you raise your price, if people can't afford your product, your business collapses. And I think that's what's going to eventually happen.
Yeah, how does copper fit in there? You talked on copper and metals running. So this whole green agenda was all built around having enough copper to do that entire changeover of our entire world to, these renewable energy devices. We'll just lump them into one large category. But it doesn't even appear that we have enough copper to do that, not even the rare earth minerals, but enough copper. Now, what if all these renewable energies become far too expensive and all these contracts that were written before, they can't be delivered because everything tripled, quadrupled, 5x, 10x in price? And then, where does this leave our world on the conversion over to, just based on one of the simplest, most common metals on the planet, starting to head up in price also?
Yeah, I mean, I'll be a little bit controversial. The green movement is dead. So nobody's buying EVs. The price of lithium is stalled. Fisker's going to probably go bankrupt. Ford is losing their shirt on EVs. I just saw an ad for the Ford Lightning. They're basically trying to give it away now. I got an ad for a rental car. If I rent a EV for rental at Hertz, they give me 2 days free. They just can't even give this stuff away because the cart got ahead of the horse. There's no infrastructure to support it, and it's basically another plaything for the rich. So, if you're not wealthy and you live in an apartment, how the heck are you going to charge your vehicle, right? And then you're running around on like we just took a trip last year. Yeah, it was last year, and we were thinking about, hey, let's just rent a Tesla to kind of see how it goes. And then I started doing the determination between locations. I'm like, oh, shoot, I may not be able to get from A to B while having to park for 3 hours to recharge. And if I get where I'm going, I don't even know where the recharging stations are. So I just think it was another one of those things where they try to force an issue down people's throats, and people are reacting to it. But as soon as we go into an officially recognized recession, the whole green thing is going to be out the door. People are just going to shut it down. So I just think it's in its death rattle right now. And look, if we roll back into a La Nina period, which I think we're going to be rolling back into, it's already cold in this El Nino environment. This La Nina environment is going to be very cold, and I think people are not expecting that. And it's funny, humble brag, I was just in Tahiti on vacation, and I was talking to a guy, actually ironically from Southern California, and he was telling me he was worried about rising sea levels, while his wife didn't want to go to the Maldives and she wanted to go to Tahiti instead. And I just looked at him. I said, the Maldives are doing just fine. 50 years ago, they thought those islands were going to go under. I said, here's pictures of Tahiti 100 years ago, same shoreline, my friend. And so people are he's an educated person. People are still thinking that this thing is possible. And I think we're going to need a few years to a decade of just really cold weather to get people off this notion, when these PDOs and the AMOs start flipping negative all over the world.
Yeah, we're looking at the Indian Ocean temperatures are behaving strangely, that their forecast going out for the next 6 months shows that flipping cool back into something that was the equivalent to the lows that were experienced during the middle 1980s. And it's baffling them how quickly it's occurring. And they're just shaking their head, looking at their possible forecasts out for measurements going, how can it flip that quick? We're talking about the Indian Ocean here, not Pacific with El Nino's Nina temperature variance, but out in the Indian Ocean, not widely talked about. But they're also just a little baffled on how it's going to turn so cold. And then we got the La Nina eventually, again, 6 months, it's not a precise science. So when they can't really even give you a correct ENSO forecast going out 6 months, it's still probabilities to a good degree. They can see the trend it's going. But again, this whole climate science thing, and move us over to green agendas and start this global tax thing, which is going to be a big one. If global taxes start, I mean, how are you going to be able to afford other things on top of all of these taxes of this and taxes of that are built on top of something that'll be a whole new class of tax?
It's worldwide communism. They can't sell the merits of the system, so they have to create these boogeymen. But good thing God has a sense of humor, and He just keeps thwarting them at the moment until He decides to end it all. But for me, I can't control any of that. All I can control is the ability for me to outrun it. And we're in the inflation mode now. The problem's going to be that inflation mode will just that'll absolutely just flip. We're going to have higher prices, but we're going to have deflation. And let me explain what I'm talking about. Is that inflation is a monetary phenomenon. It's basically the money supply times velocity over productivity gain. And so, if you have all of a sudden just massive defaulting of loans, you can end up getting a negative money supply, and you can still have high prices. And so that's why it irks me when they keep talking about the inflation rate. Well, you really have to talk about the cost of living. And so we can literally be in deflation and have prices that are unaffordable. And that's why I always I think we're going to be in a, basically an inflationary depression, because we're going to have high prices and an inability to afford them, and you're going to have low revenue. And so that's what's going to happen here. You like cocoa, I mean, what confectioner can make money at 9,000 a ton on cocoa, right? They can't. They've raised their prices so much, and nobody's gonna buy them. You went to the grocery store, they're already discounting Easter stuff because nobody's buying it. And Easter's next week. Well, this Sunday coming. So if they're already discounting ahead of Easter, people you're not getting a move. They raise the prices, people can't afford it. So that's what ends up happening, is that the manufacturers now are going to be like, okay, I can't pass on the price increase that I want to get to make sure that I get my margin, because you don't get the volume. And that's when things start to collapse around the world. Look at RV sales right now. Okay. The cost of building an RV has gone up, but people's ability to buy the RV has not. And all of a sudden RV sales are collapsing. So that just times that by every sector. And you get to a point really where it's the elasticity of demand is what's most important. And that's when you just, with things that people have to have, all their income is going to go to that, and none of their income is going to go to the other stuff. That's what United States, we're particularly vulnerable to inflation, Dave, because most of our spending is nice to have stuff and nice to have services, and psychologically, when all you're doing is living to put food on the table, to make rent, pay your medical bill, right, and try to get to work, you become very, very angry inside, and then that manifests externally. And I think we're going to rapidly get there. And remember, 2/3 of our economy is built on that other part of the environment. So, you're going to, think about it. Travel industry is going to have problems. So you're going to be buying Airbnb. You're going to have issues with, like you're going to get a massage. You're going to go to the gym. LA Fitness out here in California, the gym is half as busy as it was a year ago. Cable companies blowing up their people are just cutting cords. I mean, I can go on and on and on, and it's just a slow motion destruction of our economic system because of inflation and the greed of our government.
Yeah. So one of my last questions here, then, if people are going to run to something, this is a question I've had asked a couple of times: is crypto truly a flight to safety? Like, if something, if all these prices start going up, oil starts ripping, the war starts expanding, will people park their money in crypto? And generally, overall, yes. If it does, then market generally, in a sense, will go up, because we're coming to the Bitcoin halving. So it looks like, at least until November of 2025, it looks like it's going to run upward. But do you think, just as, I guess, is a yes or no question, do you think people will now truly consider crypto a flight to safety as much as they would gold in times of turmoil, I should say?
I think it's an age thing. So the younger people will probably drift towards the digital assets. The older people will drift towards what they know. And I think with Bitcoin, it's still is still a bit of a mystery to most people. The adoption rate's still not, where it could be, where it'd be like a mass adoption of Bitcoin. But I think what will happen here, if you start getting a move over 100,000 in Bitcoin, you're just going to attract people saying, "What's going on here?" So I think we're going to see that move, but it's a flight to safety in the sense that it's outside the banking system. And so if people recognize that, the only thing that people don't know is the government's ability to be able to steal that asset from you or legislate it or regulate it. There's still a lot of unknowns there. And I think that probably worries a lot of people. And so, in a sense that if the world was normal and fair, Bitcoin would be the obvious asset to own, but the world isn't that. So we have to try to figure out what are people like Elizabeth Warren trying to do to keep the fiat system alive and to screw you from hopping off that bus. Look what they did for gold for 50 years, right? They've suppressed it to a point where now China can take that away from them. They've been trying like heck to make these digital assets hard for people to own. If you're a U.S. citizen, good luck trying to buy a lot of altcoins, right? They're shoving you into smaller and smaller brokerage shops. Now you're in ETFs with all the money changers. What are they going to do there? If your money's in an ETF, what if the government comes in there and just says we're going to seize that asset like they seized gold? So there's a lot of things that people are still rightfully nervous about. But as a general rule, I would just trade the trend on it. And our view is that we're going to run over 100,000 on this move, and then we're going to get a significant pullback, enough of a pullback where people will say, "Oh, the crypto movement's dead," and then we're going to make the big move up to, into the $350,000 range. But it's gonna pop up, and then you're going to see another 30-40% correction in Bitcoin. And everybody and their brother's going to say, "Oh, you're an idiot for buying it." And most people will be, because they'll be buying it at 100,000. So what you want to do is you want to run it to 100,000 now, and then you want it to pull back to this breakout zone here around 70,000. And then the next launch will come from 70,000 sometime next year. That's my view. That's our work that we've done on it. But, at this point in time, you have a lot of choices. Bitcoin. When I say crypto, I'm a Bitcoin maximalist, so I don't really follow all the altcoins. They're just playthings for me, and take advantage of this run, because this run that we're going to have here is going to be meaningful to your portfolio, and then it's going to position you to survive the deflation that's going to come from it.